Welcome to Inner Circle Precision. In this video, I'm going to teach you the ICT market structure and end up creating a strategy that is very good for trading as well as passing prop firm challenges. Firstly, why should you trade ICT in 2025? It is all because it is a consistent strategy used by institutional traders. It also works in all market conditions as well as all market classes. It is proven by thousands of traders, including myself, that it is a profitable system. And above all, it emphasizes patience and market logic, not indicators. So what you will learn in this video will consist of understanding market structure, an in-depth of market structure explanation, and understanding the swing lows and swing highs, as well as combining all these concepts to make a strategy that is powerful. When we talk of market structure, we basically talk of how the market flows on our charts. This is how the market flows. If you open any other trading asset or trading class, asset class, they usually mimic this particular flow. So every time when the market breaks a higher high, and by higher high, this is the point that we are implying to. When it breaks a higher high, we call it break of structure. So in this particular case, the market went to the upside, and this move to the upside actually broke this particular price, and we call that break of structure. This shows that the market intends to continue in an upward direction or in a bullish direction. Why are we talking of this basic stuff? We want to expand this concept later, so you need to be able to understand and comprehend everything that I am saying right now. Alright, so basically, this market structure is not something that is clear in all time frames, or in all asset classes, or in all flows of the market. But I'm actually giving you an example of how it looks like, so that when we go to the difficult or complex flows of the markets, you'll be able to understand. So on the other hand, if the market breaks the higher low, like in this particular case, this is a higher low. We were talking of breaking the higher highs in the previous slide, but now we are talking of the breaking of the higher low. On the downside, we call that a change of character. So when the market is actually trending to the upside, breaking the highs like this, it's actually breaking structure, but telling us that we are going to the upside. But when it breaks this low, which is this particular higher low, like this, it actually informs us that there might be a change of trend. So whenever we break this particular low, we actually anticipate that there might be a change of trend. So to further our knowledge on market structure, we need to define swing lows. These are lowest points between two consecutive highs. We mean that if the market is actually trending in an upward direction like this, and we have this high and this high, this low is what we call a swing low. So this is a swing low. So understanding that swing low, we say as long as the market remains above the swing low, we will continue validating an upward bias. So in this particular case, you can see this high and this high giving us this low as our swing low, and the market remaining on the upper side of the market without violating or closing below this particular price, we say we are still in an upward bias. And to validate a change of character, we need to see a candle that closes below that swing low. So we need to see a candle closing below the swing low for us to validate a change of character. The same concept applies to a bearish scenario, whereby we are saying the market is giving us lower highs and lower lows like this, and these are consecutive lows. Therefore, this is a swing high, and as long as the market is still below this particular swing high, it is still a downward move. We only validate a change of character if the market actually comes and closes above that swing high. So to make this all into a strategy that is tradable, there are several strategies to utilize market structure. But in this video, I'm going to give you one which you can utilize swing points. To shorten the explanation, we will just say step 1 is break of a swing low or high to confirm a change of character. Basically, if the market is going to the upside like that, we want to see the market break this swing low, right? And then step 2, we anticipate pullback to a clear valid PD array, which is in form of an order block or a fair value gap. So basically, pull back to a PD array, and then we continue with the new trend that has been set. Let's have an example on the charts. But before we do so, check out our free Telegram channel. I'll leave the link in the description box below. All right, so this is basically the Canadian dollar against JPY on the daily time frame. All that we are doing is to apply everything that I've been talking about. We can see that here the market was actually creating the lows, the highs. This is a high, and after that high we can see another high being created, which is this one, and the market actually broke this low, meaning that the market was actually trending in this particular downtrend. We've said when we are actually trending, our strategy will only work if we see a change of character, meaning that this low and this low had this as swing high. This low and this low had this as its swing high, right? So within that swing high, we can see that this as the last swing high, the market actually broke and closed right above this particular swing high. After breaking and closing above that particular swing high, we can see that the market came back to an order block. What is the order block? This red candle is the order block where the market actually came to retest. So this was the high and this was the low. If an order block is wide, we actually halve it. So this is where we were interested to make an entry, and we can see this EBP in play, which is basically standing for engulfing bullish pattern, right? This particular green candle engulfed this particular red candle, and the market went to the upside basically like that. So what we are saying is always try to find a change of character, which is basically a change of the market structure. After finding a change of character, or basically a change of the market structure direction, you now need to look for the market to pull back to a PD array, since it is already confirmed of the new direction to take. On that note, we've come to the end of our today's video. Thank you for watching, like and subscribe, and I'll see you in the next one.